On the surface, a quiet day. Stocks chopped sideways, a ceasefire held, and oil leaked lower. But underneath, something happened that the market hasn't priced. A frontier artificial intelligence model, pointed at code that human experts had reviewed for years, found a 4-year-old flaw in a privacy network in a single day, a flaw that could have minted untraceable money out of nothing. And it wasn't a one-off. The same kind of model found more than 70 vulnerabilities inside Palo Alto Networks' own products in weeks, over 7 times what its security teams usually find in a month. Every line of legacy code on Earth is now auditable and exploitable by anyone with a frontier model. So where's the edge? Not in the crowd. The whole market is the same handful of artificial intelligence names. The edge is in the question almost nobody is asking. When a machine can audit the world's code in a day, who gets paid and who gets commoditized? The evidence prints Wednesday. Then act. This is the asymmetric, issue 11, the audit. Tech and crypto investing for thoughtful retail from an operator's lens. On the eve of the most important data of the quarter, a second, quieter repricing got proven live. Every codebase on Earth is now auditable by a frontier model. Here's the one-line read, the eve of the verdict, and a new kind of risk proven live. On the surface, a holding day equities chopped, the ceasefire held, oil eased, but nothing moved the curve. The 10-year Treasury held about 4.5%, and both gold and Bitcoin kept falling on the cost of money. Underneath, a frontier model found a 4-year-old, undetectable bug in a privacy coin in a day, and 70-plus flaws in Palo Alto's own code in weeks. Inflation and Oracle land Wednesday, SpaceX trades Friday. The same discipline labels run throughout. Confidence, high, medium, or low. Consensus versus variant, what the market believes and where we may differ. And on every call, what would change our mind. This is research, not advice. Part 1, the audit, a holding pattern on the eve of the verdict. Where the tape sits, equities chopped sideways, building on Monday's relief bounce, but the curve never blinked. The 10-year Treasury held near 4.5%, close to a 2-week high, and a rate hike by December is still the base case. The tell is the havens, gold steadied near a late March low, and Bitcoin sat near a 19-month low. Both fell on the cost of money, not the geopolitics. This is a tape waiting on a verdict it cannot preposition into. Start with rates. Wednesday's consumer inflation report is the swing print. Consensus looks for the core to run about 0.2 to 0.3% on the month, with the headline hotter, near 0.5%, lifting the annual rate toward 4.2%, the highest since 2023, driven by energy. The core is the number the Federal Reserve watches. A cool core is the bull's first lifeline since the jobs break. A hot one rearms the hike trade. And behind it waits a hawk. Kevin Warsh chairs his first meeting June 16th and 17th. Then the structure of the market. Strip out the artificial intelligence cohort, and the broad market is roughly flat since late February. The market is the artificial intelligence trade, and Friday proved how brittle that is. One Broadcom guide took the chip index down about 10% in a session. On Tuesday, equities opened higher, then chopped as a rotation out of crowded tech flattened the move. Breadth this narrow is its own tail risk, and the shocks are being faded until Wednesday's data says otherwise. Into that tape lands the largest public offering in history. SpaceX trades Friday, about $75 billion raised at a valuation near $1.8 trillion. OpenAI has filed confidentially. Databricks is raising near $170 billion mark. $3 trillion names queued at once. Retail has been let in, and crypto venues are already trading it at a premium. A strong debut says the issuance vacuum still has appetite. A weak one says the demand limit is finally found. Now the havens, and here's the tell of the day, both fell. Gold steadied just above $4,300, near a late March low, held down by a firmer dollar and higher real yields, not lifted by the war. Bitcoin sat near a 19-month low, around $60,700, after dipping below $60,000. When both classic safe havens fall on a day a war is still live, the market is telling you the dominant variable is the cost of money. Underneath, the mechanical bid persisted. Large transfers off exchanges into custody and sizable stablecoin mints. Put it together, The macro spent the day waiting, relief that held but didn't broaden, havens that kept falling on real yields, an oil tail that eased but didn't close. The curve never blinked, and underneath the quiet tape, a structural repricing of software and security ran that the multiple-rich artificial intelligence complex has not yet digested. The message is simple: less duration, less leverage, and more cash to deploy on the other side of the print and the deal. Part 2, in focus, the name at the center of the repricing, the data, then the debate. The lead is Palo Alto Networks. It sits dead center of the day's durable story. Frontier models found more than 70 vulnerabilities in its own code in weeks, over 7 times the usual monthly find. Its chief executive has been the loudest voice on it, warning that artificial intelligence is uncovering years of bad code and declaring that analytical software as a service is over. That line is the bull case and the bear case in one sentence. The business is a scaled cash compounder, not a cash burner. Revenue up 31%, next-generation security recurring revenue up 60% to $8.1 billion, a free cash flow margin near 38%, and a net cash balance sheet. The bull: if every codebase is now auditable, security spend must rise structurally, and this is the platform built to capture it. The bear: it trades at 55 to 70 times forward earnings into a 4.5% 10-year, and the stock fell even on a beat. Right thesis, wrong multiple at the wrong moment. In crypto, the real headline is the privacy paradox. A researcher used Anthropic's Claude Opus 4.8 to find a critical 4-year-old soundness bug in Zcash's privacy pool within a day of release, a flaw that minted valid-looking coins from nothing. An emergency fix shipped, and Zcash fell roughly a third. But here's the paradox. Because the pool is private, whether the bug was exploited over the past 4 years can never be cryptographically proven either way. Generalize it: any protocol whose security rested on expert humans reviewing the code is now living on borrowed time. That's a repricing of protocol risk the broad crypto tape hasn't digested. And the thematic read: analytical software as a service is over, and it cuts both ways. The capability sorts the software world into 2 buckets: who gets paid, the consolidated platforms that own the customer, the data, and the workflow, security being the sharpest example, more attack surface sold through fewer vendors, plus the infrastructure the audits run on. Who gets commoditized, thin, single-function analysis tools whose value a model can now replicate directly on the customer's own data. The market still prices most software as one bucket. This is the cleanest new investment axis since the regime turned, a lens to sort the watchlist. Part 3, the audit signal, a data verdict, and a structural repricing landing at once. Consumer inflation is the master switch. Read the core, not the energy-driven headline. Oracle borrows to grow, Palo Alto prints to grow, and the regime rewards the second profile, even as it marked both rich. The artificial intelligence cyber repricing is the new, unpriced axis. It bifurcates software into what gets paid and what gets commoditized. And SpaceX is the issuance trade's demand test. The edge stays in optionality. What we are watching, the verdict week. Consumer inflation on June 10th, the master switch. Oracle's earnings the same day. Producer prices and the European Central Bank on the 11th, a central bank hiking into an oil shock. The SpaceX debut on the 12th. The Federal Reserve and Warsh's first press conference on the 16th and 17th. Whether more vulnerability disclosures follow Zcash and Palo Alto, whether Bitcoin holds 60,000, and at month end. A copper review on June 30th. And we keep score in public. Palo Alto, a quality compounder, patient on entry. Oracle, watch the print. Broadcom and Alphabet, quality core, patient on entry. Bitcoin, a capitulation tape, entry sensitive. Amazon, attractive, a staged buy. Gold, constructive. Cigna and EQT, still attractive. Each is a dated, falsifiable call, and we grade them. So where does it land? 3 takeaways. The macro spent the day waiting, and the curve didn't blink. Both gold and Bitcoin fell on the cost of money. A frontier model audited the world's code, and the world hasn't repriced it. Analytical software as a service is over, the bull case and the bear case in one sentence. And SpaceX is the issuance trade's demand test, Friday, into the verdict's wake. The edge this week is not a position, it is optionality. And the dry powder to act after the evidence prints. That's the audit. The asymmetric turns filings, flows, and market data into one disciplined read for investors who want the evidence, not the noise. This is research, not personalized advice. Verify it yourself. We'll see you in the next issue.